So we're going to kick off with Elementos. So we have Managing Director Joe David here to tell us all about Elementos' two projects, one in Spain and one in Australia. So I'll hand over to you, Joe.
Thank you, Freddie. I'm going to assume you can all hear me unless someone tells me you cannot. Apologies for not being able to be in London with you all. I think this is my fourth investing in tin conference, and the first one I haven't been there in person. So, yeah, apologies, but you can't make it to them all, I guess, and especially after being with you all in Malaysia in May. And such a fantastic event that was. It's a pity not to be with you all again. Compliments to the speakers that have already gone ahead. Tom, I always learn a lot. Freddie, your introductions have been fantastic, and Myra always does great works on the tin code, and we as a company are very much looking forward to reporting its tin code at the appropriate time. And Joseph's talks are always very engaging and often comes from a different angle than I guess the rest of us are used to talking. So thank you very much. Getting on to Elementos, however. So I'm just going to set my timer here to make sure I don't run over. We're an ASX listed company. Some of you in the room have probably heard of us before, but those of you that haven't, we have two mining assets, one in Andalusia, which is in the south of Spain, as well as the old Cleveland project in Tasmania. What I haven't presented to the ITA community thus far, because this deal happened after the event in May, is our option agreement we now have over the tin smelter in Extremadura in Spain, which is about 220 kilometres by road away from our Oropesa tin project. So there's a lot of talk already today, and I'm sure there'll continue to be. How is the West going to get their tin supply? Are smelters going to go upstream and start investing into mines? To be honest, we weren't prepared to sit around and wait for anyone else to play that role, so we went out and got it. We've been engaged with CRM, who are the owners of the Robilidaneo smelter, for many years, and this year we decided to finally put the ink to paper, and we've agreed over a 5-year option to take a 50% stake in that smelter. That will make us a vertically integrated tin supplier within the European Union. Obviously, there's other people in the room that have tin projects in Europe or close by that may argue with whether we're going to be the first one, but certainly that's our goal, to be Europe's first primary mine to metal vertically integrated tin supplier, and I think we've gone a long way to show our commitment to that already by purchasing this smelter. Now, people ask you, politically, obviously, as we discussed, European Union and Spain as a member state are very much aligned in making, securing a domestic supply of tin for their economies. Politically, that obviously plays well as well. But I guess I'm a believer that all good decisions have an economic basis. And it's not widely spoken about the tin industry. Obviously, they've been in the industry for a while, aware of it. But Europe has a significant tin premium, currently trading for about $1,000 above the London Metals Exchange price. And North America also has a tin premium in the $1,500 to $1,600 range at the moment, I believe. So because of that, that's the economic story. We believe the TCRCs of operating smelter within Europe are going to be substantially below that premium. Therefore, keeping in Europe not only gives us high revenue, netting off the TCRCs, but you obviously have all those responsible things we've already spoken about. We're not driving the concentrate 300 kilometres to a port. We're not then shipping it halfway around the world to the Asian smelters. We're not having to finance 3 to 4 weeks of working capital, 3 to 4 months of working capital. All very positive things. And yeah, us at Elementos are very, very focused on securing this and vertical integration. Tasmania, I'll take you through that in the back end of the presentation. We do have a very good looking tin and copper resource there, but what's got us very excited is these critical minerals we've recently drilled underneath the tin copper resource, including tungsten, rubidium, fluorite, and a number of other critical minerals on many, many lists. Now, I guess already we've spoken about the fact that tin may be a byproduct of other primary mines. In this way, we're probably looking at the opposite. The tin copper would probably be mined first, and it'll be the thing that liberates these other critical minerals, which is sitting slightly deeper. So it does work both ways in the industry, but either way, two very exciting projects. So for us, just going through the investment case, we really are a mature developer. Really, we're in the back end of our DFS in Spain, as well as submitting our primary licenses. So we're really in that back end. All the heavy lifting's been done, all our groundwork's been done, all our primary engineering, investigation reports have all been done. So we're really in the back end of that DFS. That DFS will be out during Q1 next year, which is obviously a very critical milestone for us that we've been working to for a while. On top of that, we've acquired the smelter option and very much looking forward to exercising that. We are talking to other parties about already playing a role there. As we all know, it's a number of projects in Northern Africa, within Europe, amongst other locations, that this may be the smelter that material should naturally move to. Obviously, there's some other business cases out there as well. So we're working with a number of parties, but certainly the strategic footprint we've put on that smelter, we think is hopefully a flag for the industry, and others will do similar things. We picked up some extra tenure in Spain, so we'll drill that out, as well as doing some further drilling and studies down in our Tasmanian asset. So for us, a very tiered approach to driving value through the company. So the tin market, I'm not going to focus too much on the tin price. We all know, although we did a bit of maths in the last few days, and on average over the last 12 months, both the LME price and the Shanghai futures price have sat just above $30,000. $30,000, over the years has been speculated on probably that price that needs to bring on a lot of tin mines around the world. We certainly, as a board and as a company, have used $30,000 as our base case for the technical studies. Our project, at least the one in Spain, is an open pit project. To do that, you need to set a revenue factor pretty early in your mine planning to really determine what your pit shell is going to look like. So we've always used 30, not saying that will be the final price we use in our DFS, but just saying that's a number that we've focused on for a long while, as others have in the industry as well. So it's nice to see, whilst we've in the last month or so experienced some volatility, we really probably had a very long period for tin, at least historically, where the tin prices sit there relatively stable, at least compared to its history, which is fantastic for the industry, I think. Next slide. Now, I think everyone knows this, but I guess this is with an Elementos filter. But I think Tom and the ITA team do a very good well of showing where tin comes from. For us, I just really wanted to highlight the very small amount that's currently coming out of Australia, currently coming out of Europe. Those European tons are currently switched off. The Penalta mine in the north of Spain is currently on pause. So there's actually zero mine tons coming out of Europe at the moment. In Australia, pretty much what you see there is the output from Renison. So yeah, certainly, obviously what else is missing there is North America. Absolutely no mine supply to North America, which I know everyone's already spoken about. I won't go over materials that Tom has covered better than myself. So just where we are, we're in Andalusia, which is the most southern autonomous region in Spain. Andalusia is the mining region of Spain you want to be in. 90% of Spain's metal mining comes out of Andalusia. That's where all the big copper miners are. That's where the copper smelters are. That's where the majority of the industry is. So there's big guys. There's First Quantum. There's Matza, owned by Samphire Resources, Atalaya Mining, some very big guys. Grupo Mexico has just recently bought in, so some globally significant miners there, all operating in Andalusia. So we're very happy to be there. We are a state significant project in Andalusia, basically meaning we get the government support through our licensing and approvals process. Just the location of the smelter, you don't often find a smelter 220 kilometers away from your mine, especially as we all know, most of the smelting is currently in Asia. This currently, most people in the room would be aware, has been doing secondary products, mostly residuals, dross, and then smelting those sort of items. They have done a bunch of concentrate, and certainly our due diligence is focused on their ability to ramp up to doing a lot more tin concentrate. We're very confident with the DD we've done and working with the team at CRM that the facility will be able to take primary, and and part of our investment into the asset through our option goes to installing some further equipment into that facility to not only increase the throughput, but to increase the, I guess, the quality of the tin we'll be able to produce out the back of it. Certainly a lot of confirmation that the tin premiums are real from our partner in that asset. And I just want to comment, there's number of other comments coming through that everyone is still looking for a responsibility premium. Obviously, everyone talks about the European and North American premiums as being transport premiums effectively to attract the metal from Asia back to those manufacturing hubs. I've spoken to a number of tin metal buyers within Europe that certainly give me the impression that the premium they're prepared to pay for tin out of Europe and in North America does probably come with a little responsibility premium. They're a little bit selective of which smelters and which countries they're buying tin out of. So certainly, I think you could argue a number of those buyers in Europe and North America are already paying a little bit more to be selective of the tin they're buying. This is just some details on the current ownership and the facility that we've got the option into, licensed up to 20,000 tonnes, so certainly could be expanded for the right business case, and that's something we certainly look into with our partner CRM. Moving on, very quickly, I'll run through this study. This is our last public study. As I said, we're very, very mature with our DFS in the final stages of reporting. So some of these numbers are looking a little bit old now, but I'll highlight the numbers that stay the same. We are looking to still be producing about 15.5 million tonnes out of the back of the DFS. That was from a resource of just under 19 million tonnes. We've obviously increased that in the last couple of years. The scale of the mine will remain absolutely the same through the DFS. We're still looking at mining about 1.25 million tonnes and producing about 5,400 tonnes of tin concentrated, about 62 to 63% tin. That's about 3,350 tonnes of contained tin per year. So about 1% of the tin of the global tin market coming out of this mine in Spain at Oropesa, some opportunity to grow that. The capital cost will go up from the 86 that was previously published. You know, we don't live in a bubble. The world has experienced significant inflation, so we'll have a number slightly north of 100 million US, and the rest of the numbers will update when the DFS comes out. When we put out this study, all-in sustaining cost was just under $19,000 a tonne. Some swings and roundabouts on the build out of that cost again, so I expect that'll be updated as well. So in terms of the licensing, we will resubmit our primary licensing at the end of this year. We'll complete the DFS by the start of next year. And we are targeting the award of our primary licenses by the end of 2025, potentially the first quarter of 2026, which will then get us into targeted first production by the end of 2027. So we did go through about an 11-month renegotiation process with the Spanish authorities, specifically the environmental regulator. We've repositioned the external infrastructure to our mine, predominantly the waste dumps and the tailings dams. Basically, for all good reasons, we've reduced our impacts on birds, trees, and waterways. So, you know, in a highly regulated mining market like Spain, you've got to do things responsibly. We certainly a company that want to do it the right way. The timing is always a bit of a kick, and no one wants to be delayed for 11 months. But the result we get out of the back of this is a mine with much lower impact. We've got a very skilled international team with a focus on local Spanish parties delivering our DFS. As I said, all the key data is in, the resource is well drilled, ore sorting's done, metallurgical test work, everything's done. We're really at the back end of this DFS and we can't wait to put the results out. The resource is drilled out, very mature. We've got 95% of it sitting in measured and indicated resources, which is obviously the only resources that can go in the JORC ore reserves, and only JORC ore reserves that any bank will bank. So for us, we've got everything where we want it. We've just got to get the final study out. I'll fly through this because I'm conscious of time, but effectively, Our mine plan is very responsible. We do a lot of transfer mining. I've got an animation here that I just might flick through really quickly. So every single block of ore and waste is being scheduled and is a part of this animation. We use the pre-strip of our mine to build our tailings dam up there in the northwest. We do build quite a large waste dump at the foot of the tailings dam. That's a responsible way to do to give it extra stability. You see these green areas in the bottom. These are our topsoil stockpiles, which we keep mature and keep organic life in them for the length of the mine. We rehabilitate our waste dumps as we progress. You see the green growing over the waste dumps. That is to stop dust and various other impacts throughout the mine life. We do a significant amount of transfer mining. So this grey part within the pit, that is waste that actually never leaves the pit. So it limits the disturbance, the external footprints, and again, very responsible way. I'll flick this through due to time, but you see every single truck, every single loader, every single drill, every single dozer has all been modelled. So we're ready to get this through to the end of the DFS. And as you see, right at the end of the mine plan, as you'd expect, everything has been capped, rehabilitated, replanted in a responsible way, and a nice balanced pit lake is the result. I'll flick through. All the engineering for our process plan is done, all in 3Ds. You expect these days, so very mature. We've gone through a market tendering process with a number of parties on that. This, I guess, is the interesting thing, and certainly to people like Myra and the tin code, understanding the impacts your mine is making is critical. So we've done a lot of modelling of that to support our environmental impact assessment. We've obviously focused very much on the restoration of the project, and when you focus on the restoration on your project, it actually drives everything before that, your construction, your operations through the project as well. So for us, this has been front of mind the whole way through the project. We picked up some extra tenure in Spain, which is fantastic for our future. Certainly some very prospective tenure around the project. And I'm going to fly through the Spanish stuff because I see the time is getting away from me. Sorry, so this is Tassie. This is the old Cleveland tin mine, which we still have in our portfolio. 7.5 million tonnes, higher tin grade as you expect from an underground mine. Got a good copper credit there too. We also have a very significant tin and copper tailings reserve from the old operations, still 0.3% tin, 0.13% copper. Interestingly, it looks like there's another bunch of critical minerals that we previously hadn't assessed in that. So the economics of remining those tailings is increasing every day. Below that, we've got a significant portion of tungsten, which we've recently done some drilling into, and we drilled into this very significant exploration target for tungsten below. So for us, very quickly, old operating mine, and certainly got a big life ahead of it. This is the old mine here, a lot of underground workings. The old mine stopes there are highlighted in grey. So you can see there's a lot of stopes and a lot of area that haven't yet been mined. That's what makes up the 7.5 million tonnes of resources that we've still got there. And certainly as you get to the depths, that's where this tungsten and the other critical minerals start. So for us, a lot of analysis to move forward and exactly scoping out how this project's going to get mined. But it's a very exciting project in its own right. As of this weekend, we'll be putting some downhole geophysics down this hole. You see from our recent drilling, we hit more tin and copper and all these good things that are modelled in these red lodes here. This is from a side of the hill that had no historic drilling. So we're very hopeful that the tin copper resource that I'm currently circling here will continue to the west. And certainly the orientation that we've sort of tagged this lens a few times on the way down makes it look like we're probably drilling in parallel. So as of early next week, we'll have some downhole geophysics results, which will tell us whether we've got more tin and copper moving out to the west here, which is very exciting. And then we get down to the depth and we get all these fantastic critical minerals like rubidium, which sells for about 1.3 million US dollars a ton, fluorite, bismuth, and molybdenum. So very interesting, exciting project. As I said, I don't want to focus on them too much because we're at the tin conference, but when you have minerals like them close to your tin project, it's very likely that together they'll build the economic case for the restart of this mine. I don't need to tell you guys that tin is critical on nearly every list around the world. Just one thing, it isn't actually a critical mineral on the Australian list yet. It's been listed on a subcategory as a strategic mineral. So there's still work to be done by us and the ITH and convince the Australian government it should be on the main list. Certainly the support from the government will increase when we get tin onto the critical minerals list rather than being called a strategic mineral. Here's our board, market cap, the rest of the details. It's fair to say most of us juniors, I think you'll hear the same from a lot of guys in the room today. It's been a tough equity market. There's been a lot of management changes in a lot of the junior mining companies. I think 3 or 4 of the CEOs speaking today are new. And that often happens when times are a bit tough. Certainly for us, our share price has taken a pretty big hit, but we remain focused. We've got good supportive shareholders that keep us moving forward, and certainly we'll look to finance our projects in any way possible. But certainly when the equity markets aren't so strong, we certainly turn to strategic partners, look at asset transactions, and we'll continue to do that for our shareholders and investors moving forward. Thank you very much. If anyone wants to contact me, please reach out in these details or contact anyone at the ITA and they can put you in touch with me. Thank you very much.